Today, we're going to be diving into a topic that seems to be front and center on every media outlet and everyone seems to be talking about, and that is how elections, namely the presidential election, impacts the real estate market. Now, it seems like every 4 years or so, as the political landscape heats up, so does speculation that the outcome, or even just the running of the election, might impact the economy, and by way of the economy, the housing market. So what we're going to do today is talk about some of the different variables that impact the real estate market, interest rates, local job markets, and talk about how election could create uncertainty around those variables. You also have to think about sort of the psychological elements that go into making a really big decision like purchasing a property during an election year. Sometimes buyers and sellers, maybe they'll sort of take a wait and see approach rather than jumping in. They might hold off on making big decisions until the election results are in, and that could slow down market activity even more than it already has. Hey everyone, as a reminder, my name is Dave Meyer. I'm joined here with my friend Zach Lemaster from Rent to Retirement, and he's going to be joining me to dive into some data and some predictions about what is going to happen to the real estate market in this presidential election year. Zach, thank you so much for joining me.
Dave, I'm excited to be here. I think this is a very interesting topic to talk about because for myself, when I'm uncertain on what to do investing, whether to buy or sell properties, or simply don't know what to do, I always like to look at the data and look at the trends to allow myself to be a more confident investor. And looking back over the past 28 to 32 years of election years and how those trends have impacted the real estate market, I think will be very surprising for everyone. So I'm excited to dive into it.
Great. Well, we are going to get into a lot of data here today, everyone. So stick around for that. But first, Zach, I want to ask you sort of how do you go about thinking about this? Like when you're pulling data, like what questions are you trying to answer through the data?
Really, I think when people are looking at data, myself included, we're all trying to understand like what's going to happen. Looking back at historical data to have a general idea about what are we predicting the future to look like? And no one can do that with 100% certainty. But I do believe that having a clear understanding of historical data will give us a clear picture on what we're likely to expect so we can make educated decisions right now at this point in time. In addition to that, I like to look at a data point that's a few years preceding and a few years after the fact of kind of where we're at in this point in time right now. That will give us a good idea of like short-term trends as well as long-term trends. And I also like to always look at data also with just a grain of salt, Dave, because simply no one knows what's going to happen. But as long as we're investing for fundamentals, we can be certain that we're going to make strong investment moves. But yeah, we have some really interesting things that have happened over past election years that I'm excited to dive into.
Awesome. Well, tell me a little bit about the variables that we looked at. I mean, I mentioned some of the obvious ones at the top of the show, like interest rates, but what other metrics are you looking at?
One of the main things that we looked at for past election years, and this is going back to 96, okay? So past 28 years of election, when we were diving into the data, we looked at things like, appreciation. Did home prices go up or down, both before, during, and after the election year for those years? What happened during sales volumes? Where were interest rates at those points in time? And it's really interesting to see, looking back at historic data where, hey, up until 2012, interest rates were much higher than they even are today. We looked at rent prices and what was happening during rent trends, population growth. I think all these things factor into where we're likely headed based on that. It's specifically an election year this year. And we're recording this early on. And so I think that's really important to know, Dave. I don't know if you would agree or not, but we're recording this early in the year to allow you to be in front of the trend. That's really important, I think, when we're looking at trends, is you can capitalize on trends and make smart investment moves if you're investing early on in the trend versus the tail end of where things are likely going. So we like to be in the path of progress. And I think this is a really key timing for us to come out with this data. I mean, would you agree with that? Or
Absolutely. I think, the housing market generally, first of all, slows down around the time of the election year, and it might slow down even more. So if you want to make a move based on some of this data, you're going to probably have to do it earlier in 2024. So with that said, Zach, can you give me a little bit of the highlight of some of the data that you've looked at and perhaps contextualize it for us so we understand what some of this data means?
All right, let's start with appreciation, right? That's a big thing, wondering like, where is the housing market headed? And this is all very interesting to see where we've been over the past 2 years. Just as a quick summary, we've had historically low interest rates that we've ever seen, and then there's been a large increase in interest rates over the past 18 to 24 months. That is likely stabilizing and probably going to decrease over the course of the year. I think it's safe to assume that. Sales have stagnated in most markets, and it's been a little bit more of a buyer's and seller's market, kind of even playing field. But there's been a decrease in sales volume as well. Now we're already starting to see that increase into 2024. But the first thing that we look back to 96 was what was happening with home appreciation rates. And Dave, it was interesting to see that every single election year over the past 28 years, home prices have increased. And out of the last 8 elections, home prices have increased in the double-digit returns. And so the one outlier is one strange year. Dave, you have any guess what that year might be?
I'm going to go with 2008.
2008 is consistently the outlier here, and obviously that was an interesting point in time. But even 2008 had some surprising data. So just to summarize, every single year over the past 28 years, home prices have increased during the election year and the year following the election year, with the exception of 2008. In 2004, 2012, and 2020, we saw appreciation rates in the mid to high teens. And so that goes to show us that home prices are likely going to increase during election years. And I would agree that is the same thing for 2024. Even though we're early in the year, we've seen just where we're coming in the market cycle. We've seen a little bit of stagnation in home prices, and we're starting to see, at least in the markets that we focus on, home prices increase and builders increasing pricing on their houses quarterly as we used to see. So, Dave, have you seen the same thing, or what are your thoughts?
I do think that's important to know, but I do also want to just caution everyone that this is what we call correlation and not causation. It does not mean that just because it's gone up in the past in election year that this is going to happen this year, but it does show a pattern that is worth looking at. No surprise here that 2008 was the odd year out, but I do think that in most years, housing prices go up. So I think the key thing to me here is that seeing that election activity doesn't seem to negatively impact the housing market. Like, I would have been surprised if I saw more than 1 or 2 or 3 years with negative appreciation because it just doesn't happen that often. But seeing that a lot of the normal behavior that you expect from the residential housing market, which is prices going up, is consistent in an election year. Now, you mentioned mostly about appreciation, but we're talking about home prices. But what happens with rent during an election year? Because that's equally as important to real estate investors.
And probably a statistic that less people pay attention to, but I would 100% agree this is something that we always follow. And Dave, it's very surprising to see that over the past 8 elections, every single year, rents have increased from the year prior and the year following that. And even in 2008. And so we've seen increases in rents every single year over the past 8 elections. And I also think that we are likely to see this in 2024. And this is a trend we're starting to see specifically because we've actually seen a dip in rents nationwide over the past 12 to 18 months. And that is starting to correct. I think, we had the post-COVID appreciation that we've seen in rents. And so that's starting to, I think, have already stabilized and dipped, but we're starting to see rents also increase into 2024. But at least over the past 8 elections, we've seen rents increase every single year, which I thought was very interesting. I would not have expected that.
That's super interesting. Well, thank you for sharing that. I think that's something that people haven't really heard of. So Zach, as we go through 2024, what are some of the other things you're going to be keeping an eye on to help guide your personal investing strategy?
A big thing that a lot of people have been thinking about over the past 2 years, Dave, I think, is interest rates. And again, you said it best. I mean, we can't look back at historic data. Every market cycle, every election, every year is different in real estate investing. And so I think the point here is we're looking at general trends just to give you an idea of many of the things to expect on what the rest of this year may look like. And so looking at interest rates specifically, it was very interesting to see that interest rates have decreased every single year except for 2 years. And those 2 years were 1996 and 2016. And there was less than half a point increase during the election year. But rates have gone down in all of those years. Now, on the contrary to that, the year after the election year, all those same years, the rates increased, actually, except for 96 and 2016. So that means that rates actually dropped during the year of the election, and then they increased the year after that. Now, this is certainly an interesting year where we've had some pretty dynamic changes in interest rates over the past, 1 to 2 years, and likely what we should see or anticipate, I think, is a general decrease in interest rates over the next 1 to 2 years, based on what Jerome Powell has been saying. But who really knows what's going to happen? But over the past 8 elections, we've seen a decrease in interest rates. In addition to that, I think it's really interesting to look at population growth, Dave, because we're actually at pre-pandemic levels again for population growth. Population growth has dramatically slowed during the pandemic. We were at 0.1 and 0.2% in 2020 through 2022. In 2022, we were back at 0.4%. In 2023, we were at 0.5% population growth. And so generally speaking, the population is growing both from obviously babies being born, but also people moving to the United States at a higher percentage than they previously were when the borders were shut down. So I think that also all these things combine to show that sales volume increases as well as home appreciation, rents, population is growing, interest rates down. I think probably all those trends collectively point to a general consensus that we're going to see more home sales and volume, as well as, maybe a little bit more of a seller's market. So that points to me thinking about making big moves early in 2024 and not towards the end of the year when really who knows what's going to happen. So I think that's the general consensus that we see. Dave, what do you think?
I think those things are generally true. It's hard for me to say like this is because an election year. Like a lot of these macroeconomic changes have been in the works for a year or 2 or 3 years. So I agree with your takeaways, but I just find it sort of impossible to say like this is happening because it's an election year or sort of, creating that absolute link. But I do think that what you're saying is true about sort of where the market is heading. But that's just me. I just generally think that housing, and I'm curious about your opinion about this, but I generally think like the housing market is much more about local conditions. And so I track like elections in the local markets I'm in, but I feel like on a national level, like I'm just not so sure that in this year, the presidential election might make that big of a difference. If anything, it's like kind of might be 2025, right? But maybe that, what do you think about that?
Yeah, Dave, I agree with you 100%. I think, look, here's the big picture. And I've been investing in real estate for 15 years now, and I haven't taken a single year off in the past 15 years. There's always something. And so the reason that we're presenting on this topic is because it's relevant right now based on the media. You hear about it all the time, and there's a lot of fear factor and things put out in the media. Like there always is. There's always something, whether it's an election, international issues going on, economic issues. COVID, there's always something, and the media will always highlight something to talk about, usually the things that catch people's attention. But when I'm investing, honestly, I don't pay attention to the elections, even less so locally. It's important to understand big picture, but I don't base my investing decision on that. I think what I look at, and one thing that has made me a better investor is looking at trends and understanding what potentially could happen. But that doesn't necessarily influence where we're investing or what we're doing. We're always trying to buy strategically and follow the fundamentals of what has allowed us to be successful. So I think that's a really good point. I would encourage people not to base their decision making just solely based on the election. But hey, how do we think about this instead of becoming potentially paralyzed because of the uncertainty? And Dave, this is what you do on BiggerPockets is bring people the data so they can make informed decisions. But also understand, how do you understand the data to make an informed decision? That's the way I think about it.
That's a perfect point. Yeah, exactly. It's just trying to help you understand that this, in my opinion, it's not changing all that much. Like if you understand sort of the fundamentals of like where the market's going, what's happening, regardless of whether it's caused by the election or not, like that is what gives you the the ability to make good decisions. So, Zach, before we get out of here, based on everything, all of your insights into the market and how it's behaving, do you have any quick tips or advice for investors who want to invest this year, maybe before the market slows down closer to the election?
I would say, start now. There's no reason to wait. If you've been someone that's been focused around interest rates and a little bit of the uncertainty of what's happening with that, I would say maybe that's not the most relevant thing to look at. I think one thing that's really important to potentially think about taking advantage of right now is that we've seen really a decrease in sales volume over the past 1 to 2 years. This means a little bit more inventory availability, especially in the area like we focus on with new construction. But there's just a lot of opportunity, I think, to make moves right now, maybe more negotiation availability. I think if we're looking at 6 months from now, we're likely going to be back into a little bit more of a seller's market where there's going to be more competition, less inventory availability, a little bit more or lower interest rates will increase, buyer activity. So I think right now is a crucial time to actually get deals done where you can have a little bit more leverage as a buyer. On the flip side, as a seller, if you're thinking about selling right now, that's something you can always be conscious of where the market's at. Maybe it makes sense actually a little bit to wait a few months until the buyer activity picks up more so. But generally speaking, sales volume is already on the increase. So I think if you have been sitting on the sidelines, either as a buyer or seller over the past 2 years, now's the time to start thinking about making action because people are buying and selling homes at a higher rate already than they were this time last year. And so I think this is going to be a big year for everyone in real estate.
All right. Well, thank you for that advice, Zach. Really appreciate it. If people want to learn more about you, where can they do that?
Go ahead and check out our website, renttoretirement.com. That is renttoretirement.com, where we follow a lot of market trends nationwide, and we'd be happy to share any of that data with you.
All right. Well, thank you, Zach. And just as a reminder, my name's Dave Meyer from BiggerPockets. I want to thank you all for watching today, and thanks, Zach, again. And as a reminder, if you find this video helpful, please like and subscribe to the BiggerPockets channel. We put out videos just like this with data and tips about how to invest in current market conditions all the time, and that is the best way to stay on top of the market is to subscribe to this channel. Thank you all so much. We'll see you again soon.